G'day folks, welcome back to another update for natural gas. Now there's still a bearish momentum on the charts, so we're going taking short trades only, although we did have a couple of bullish divergence that have played out already and possibly more upside potentially, but again primarily we're looking at bearish and short trades to be taken. Before any going further, make sure you hit that like and subscribe button, that'll be greatly appreciated, and also reference our +1 videos where we look at it, you do a deeper dive into some of the trading strategies we do show in these videos. Now, in terms of the analysis, the fundamentals, the geopolitical outlook summary, for the US, expansion of LNG exports, increased domestic gas demand, and the market impacts of that, supply tightness, upward price pressure domestically. For Asia, around Japan and Korea, high LNG import pledges, ambitious versus realistic, could redirect LNG flows and tighten global supply. For the Middle East, Israel-Iran tensions threaten key shipping lanes, price spikes, supply disruption risks. For Russia, India, deepening energy ties between Russia and India, new supply flows and diversification. And for Europe, continued transition to LNG from Russia-supplied gas. Structural reliance suggests price resilience. So firstly, looking at the long-term trends, we always look at the high-level charts to see where the overall trend is going. And here you can see on the weekly, the price is well below the moving averages, and also on the CCI, so giving us a bearish momentum at the weekly level. On the daily, we've actually reached this point here. If I just blow this one up for a moment, we've got this consolidation of the CCI. It's currently fluctuating above and below that very narrow moving average range, although we do still take predominantly short trades with the price below the moving averages on the price chart. So again, just be cautious of that, and so don't go long until we see both the CCI and the price break above those moving averages. If you're trading on the hourly, we always go in the direction of the daily, of course, and here we've had a couple of bullish divergence. Actually had three of them. So first off, the latest one here is little one here. That's already broken past that 23-38% range, and the way we measure that is we look at that higher lows on the CCI versus lower lows on the price, and we draw from that low, taking it back to that high. It's already broken through that 23-38% range of that little bullish divergence. Now in terms of the the other divergence that was in play, if I zoom out, you can see here we had another, I haven't drawn the trend line, but I'll draw it just for reference. We had a bullish divergence here, a longer term one, happened during the first half of August versus lower lows on the price. And the way we measure that is, that's this little target range. We go from that low, we take it back to the significant high, so it would have been around about that area there. Actually, it would have been that one, I've drawn it, and that's at 23-38% range. This price went as far as the 61% before pulling back down in line with the CCI movement. Now the other divergence we had as well, if you can see that, it's a bit hard to spot sometimes, but it's got to be obvious. It's got to be very obvious. You had another lower lows there on the price versus higher lows on the CCI. And again, drawing a Fibonacci range, taking it from that low. So again, we would have taken it back to that level. That's another 23-38% range, and you can see there it's just touched that range, hitting it just above the 23%, and currently is fluctuating and consolidating in that range. Now you don't go long in these bullish divergence, we simply look at a potential retrace and where we can start safely trading to the short side. So again, if you're going short predominantly, because you're going short in a direction of the daily trend, don't forget, we don't go long. So what that means, like on the back test, if we go to the 1 hour chart, if you're trading the 1 hour period, we always look at the direction of the daily. So the daily is still going short, but just be cautious. We've got this consolidation of the CCI, as I mentioned, and we've had a couple of bullish divergence here on the CCI and the price on the 1 hour chart. But what I've got here, going short from this period back here, you would have taken short trades, and you can see there that's paid quite nicely, with the exception of these two drawdowns. Now again, with the way you avoid those drawdowns, you're going short in the direction of the daily, but you always pay attention to whenever the CCI and the price start trending upwards. So you would have closed out your trades at that point there when the CCI and the price were trending upwards in that little area there. Again, going short when the price and the CCI start trending in the same direction as the daily. So you would have started taking short trades from there. Avoid going long in that little period there. Going short during that period, avoid going short during that period, and again that would have avoided that drawdown because you would have avoided going short during that period when it was the price was moving higher, and so was the CCI. So that's our little strategy. Now remember, it doesn't matter what strategy you're using on the 1 hour time frame you're trading, we always go in the direction of the daily. In fact, this one is actually a 15-minute price chart, not the 1 hour. It doesn't really matter, same effect. So here we've got BOIL, first off on the weekly for zoom out. You can see there the price is still somewhat declining. It's a very narrow range there, it's a bit hard to see, but very consolidated declining period versus higher highs on the price, and this has been a very long-term bullish divergence. It didn't actually break up too strongly, it broke up slightly there, but the CCI and the price are currently trending below those moving averages. On the daily, again still bearish movement on the price, but just notice the CCI is somewhat leveling out, so we may see a couple of divergence on the lower time frame, and that's on the 1 hour here. You've got the 1 hour time frame, and now in our last video on this dotted line we had drawn this period versus higher lows on the CCI versus lower lows on the price. Now this is actually extended further, so if I extend that trend line, it's still higher lows versus lower lows on the price, so that's still a bullish divergence. And what we do then, we readjust that 23-38% target range. Again, notice back here we did have a bullish divergence back there as well. That was our initial target for that little range. That's what that rectangle represents, and we had another bullish divergence there, and that would have been identified at that point there as well. So where we are now, we draw another Fibonacci from that low to that high, and you can see there we've got another range potentially to look out for in terms of a target area. So in this case we've had a few bullish divergence so far on the charts, and we might see the price bounce to that area. Now again, I don't trade these going long, I go in the direction of the daily. That's always the key here. Don't go against the trend. It may work, you may get a hit, but notice here for example on that one it failed to reach that 23-38% target range. It fell short, then it dropped further. So you want to avoid going against the higher trend. Now on the back test again I'm demonstrating here the 15-minute price chart, and you would have gone short from that period back there when it started going short again, represented by this down arrow. Again going short, and with these drawdowns, again notice here the price started increasing, and so did the CCI, so you would have avoided that drawdown there. You may have opened one or two contracts, but you would have closed it out pretty quickly. Avoid going short during that period, obviously, and then wait for the CCI and the price to start breaking to the downside. And that's why it's good to zoom out sometimes if you're trading on the CCI and the price, to look at these moving averages, so you can sort of get a 50,000 foot view in terms of the direction. Sometimes if you're zooming in too closely, you can be blinded by or misread some of the movement. Whereas looking at it from a distance, you can sort of see very clearly there's an up movement happening there and there, for example. Now again, you don't go long there, we're going short, so wait for a further breakdown to the downside. When these moving averages start breaking to the down, you can see they're starting to curve down slightly. But on this instance, going short, that would have, you're trading $5,000 lots of these particular ETFs, that would have generated about $17,000 if you're trading on the 15-minute time frame. So looking at KOLD on the weekly, again very sort of flat consolidated period since around about 2022, but we've had a bullish divergence here and very slight movement to the upside, but since then the price and the CCI have broken to the downside back then, and now it's finally broken higher on the moving averages, you can see there. So again, if you're trading on the daily alone, you would have gone long at that point there from that candle. Now on the daily, if I zoom out for a moment, you can see here we had a bullish divergence back here versus lower lows on the price. That actually bounced and looks like it came just short of that 23-38% target range. It stabilized, fell off again. Then we had another bullish divergence, but also if you kept that trade open, that eventually closed out in that range as well. As long as you see the CCI keep rising, which it did, the price also kept rising and hit that range, and it also hit this secondary range there as well. So at the moment, on the daily, it's bullish, although I notice there's a bit of a pullback at the moment, coming back towards those moving averages. That's the daily. On the hourly, what we're looking for is any micro moves. Again, notice back here we've got a bearish divergence. That broke down, hit our target, the 23-38% Fibonacci range, fell just below it and bounced out of there. Had another bearish divergence here. I haven't drawn the target range, but you can see they're just eyeballing it. That would have hit the 23-38% range as well. And since then, we've got on another one currently, a bearish divergence there versus high highs on the price. And again, drawing a Fibonacci to that level there, that would have broken down. And just to prove that's Fibonacci hit, you can see there it's broken just below that 38% range. Draw it about there. Let's do this over here. Sometimes these, there you go. So that hit that 38% range easily, and just below it, and it's starting to bounce again. So again, here you're going predominantly long in a direction of the daily, so don't go short at all, even if it's a bearish divergence. Looking at the 15-minute back test, again going long only. Now what I've got here is going long from that period when the price broke above the moving averages, and so did the CCI. I could have started it back here, but I just, for the argument's sake, I've just demonstrated from here. And to demonstrate how you would avoid trading that and hitting that drawdown, again, notice, always pay attention to the, in this case, the 15-minute chart. Whenever you see the moving averages trending down against you, both the CCI and the price, you don't go long. So you would have closed out your trade at that point there. Go long again during that period. There was a small drawdown there, and then going long again there. At the moment, again, as I said, it's in a downtrend. Wait for both the CCI and the price to break higher to take long trades. Lastly, looking at UNG on the weekly. Now that's also bearish, price and CCI below the moving averages. So if you're trading on the daily, go in the direction of the weekly. And what we're also looking for is there's no divergence currently in play. There was a bullish divergence back there. It started 2023. And you can see there it ended in end of 2024 and bounced slightly. Here we've got on the daily, it's actually hitting this support at 1242. Now, again, notice the CCI is consolidating and the moving averages have flattened out. So that's a weakening bearish sign. So it could possibly bounce from here like the other charts also. So I'll keep an eye on that. But at the moment, predominantly still bearish on the daily. Somewhat of a bullish or a sideways neutral move on the CCI. On the hourly, again, we had a bullish divergence here on the CCI and we drew a target range there, didn't quite hit it. We had another smaller bullish divergence back there. That hit the range. But at the moment, this could possibly still go higher. Let's just see, that's still a bullish divergence there. Higher lows on the CCI. If we extended that, lower lows on the price. So that could still be hit. And if that happens, we can expect the price to retrace. If we take it back to that level, we'll draw another target range in that 38% range. So again, so long as the CCI keeps rising and the price keeps dropping, it's going to be considered a bullish divergence. Now going to the back test, again looking at the 15-minute chart in this case, taking short entries only. We've gone back here to, that was back around about the April period, back around this area here when it started going short. And again, you would have avoided going short during these uptrends, always going in the direction of the daily. You had a few drawdowns here. Again, notice each of those were in a upward move on the price, so you would have avoided those or closed out your positions. Take any losses, or take a small stop loss. You would have been up in profits anyway during that period, each of those periods. So don't get greedy, just let it run through. I'm just showing you what the drawdown effect would be if you let it run. And back here, the latest drawdown would have been at that point, and you'll notice there you would have avoided because that was in an uptrend at that point until such time it started going short again at that period back there. And at the moment, in an uptrend, avoid going short until we see both the price and the CCI break to the downside. Thanks for watching. Don't forget to reference the +1 videos where we do a deeper dive into the trading strategies and go into a bit more detail. Also, don't forget the Patreon page where we look at weekly bullish shares, and we also cover intermittently various shares throughout the week. Thanks for watching, and see you on our next update.